The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Another bank, small business-focused bank, Judo Bank, reported this morning. Underlying profit before tax increased 2% to $110 million, in line with guidance. Gross loans and advances grew 20% to $10.7 billion, which was the top end of guidance. Profit after tax, $70 million, following a slight drop in earnings. And following the results, the bank did announce a dividend. The company reconfirmed its FY25 target of 15% growth in profit. Did make a comment, because they specialise in the small business market, that small business borrowers were hurting at the moment from lack of demand from a slowing economy. But overall, Judo Bank's share price up 10% today, currently trading. So the market liked the result. Mark, what did you think of the result?
Yeah, look, I've been a fan of this company for a long time, and I just think it's just so difficult to get growth in the banking sector here, realistically. So you've got your incumbent Big Four,
yep.
And then Macquarie Bank's not, it's not your traditional bank. So, and they manage capital really well, these guys. So, I mean, even though their non-performing loans rose to 2.3, which was nearly sort of double the previous year, their cycle assumptions were 3.3 or above. So that's, I mean, it's still well below where, what they're budgeting for, because obviously they're aware that business loans are a little bit more risky. But their NIM is their NIM's higher than all of the other, the Big Four banks, and has been for quite some time.
2.2 or something?
No, I think 2.9.
2.9.
So, yeah, look, I mean, this will be, I would have thought this is the sort of thing that if we do get softening in the economy and weakness in the economy and the market, this is probably a good one to be buying the dip on into the next cycle, because if you've got a growth cycle in the economy, and we've been, since these guys listed, we've been very up and down, back and forth, higher interest rates for the first time in a long time. And they've still managed capital very well. So this would be the sort of thing I think will probably double or triple in price over the course of a good cycle. And they're they're 10.7 billion loans now. I think we've been watching this pretty closely since inception. They've ticked every target they've set. They've ticked the box.
Yep.
So, and I find it hilarious that NAB, which is coming up, sort of started to go back into that small medium enterprise. I mean, these guys got a banking license because the Big Four didn't want a bar of it. And now they've realised, if you just do your job properly, there's money in it. So but I think, that it's really low cost. There's no branches. It's a neobank. It's all online, and they're managing their capital via I think one of the things as well, they had a TFF facility from the RBA, which they're unwinding, which has sort of hurt them a little bit. That will come off the books H2 in 25 and have no further impact. So that'll actually help increase their NIM again. So I don't think I'd be necessarily buying here at the moment. I think we've probably got a softening in the economy coming at some stage. If the US is looking at softening, we're usually about 6 to 9 months behind. But you'd certainly be buying dips in this overall, because I think it's probably a really good long.
So if you're in it, hold it.
Oh, absolutely. If you're in it, hold it. It's sort of, with our clients, it's personal preference, because we bought quite low at around about 90, and we sold them, I think somewhere in the high 120s or something like that. But some people really wanted to keep it for a long-term holding. So yeah, we've had it in portfolios for quite some time.
Okay, all right, Mark Moore.
A couple of years. It's only got 2 years listed history, so there's not enough data here. But I had a look at their report, and I agree with the other Mark that they have ticked all the boxes, and it is progressing very, very well. So all the aspects of the business are growing nicely. It was on a P of about 18 before the 10% up today, so it's even more expensive. So the problem is, for us, there's not enough history yet. I'd say bravo, they're doing a good job, and in a couple of years it might start appearing on our filters. And I agree, if you had it, you'd hold it, but I wouldn't be in a hurry. I agree with Mark. I think the banking cycle, we're at the high end of it at the moment, and these guys are still not proven. Yeah. So, they're looking good, and I think their positioning is very good against the big banks, because big banks basically have walked out of small business lending completely, because they just want to do mortgages because it's easy and they're lazy. And these guys are in a better position than the independent lenders, which is there's a whole shadow industry out there, and they're sort of in the credible side.
Yeah, I was just going to mention that there are a whole lot of fintechs that have come out and targeted small business. Yeah. This is sort of halfway between a traditional bank and a fintech.
That's right, and they can do all the bank things. Yeah, they can do offset accounts and stuff, I assume, and things like that. Whereas a lot of the shadow lenders can't do that stuff.
They're market leading term deposits, so they're and they really
5.25 I saw.
Yeah, something like that. Yeah. It's them and Macquarie actually leading the way generally of late, which is surprising. Well, that almost makes me a little bit concerned with Macquarie. Maybe they need capital for some reason. But these guys have always wanted, having that, which is sort of even if you look at the CBA annual report versus these guys, change the colours are pretty similar. One thing I didn't look into, which I was in a bit of a rush, but I'd probably just have a look into the construction. They normally do have a chart in the annual report about how much loans out to construction.
Right.
If that is quite high, I would probably be selling maybe and just taking some profit. And then I think because construction industry, I think, is not looking great at the moment. No. So in terms of you don't want any defaults on loans.
There's blood in on those properties, some of them.
Yeah. There is, yeah. So
okay. All right, that's our stock of the day, Judo Bank.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.